Thank you for joining me. I'm Alex, and I want to talk about Jack in the Box. So, what they do is they make fast food, and it's probably one of the restaurants you've never heard about, or one of the restaurants you see every day because they're in very specific locations and not anywhere else. So, where I live, there's none. Current price is $93.88, which gives them a market cap of $2.1 billion. Dividend yield is 1.74% with a payout ratio of 31%, which is not terrible, but also not that great. Revenue $1 billion, earnings $90 million, and they currently have a PE of 24, which is a tad high, but a forward PE of 17 is pretty decent. Total assets $1.9 billion, which is up not over, but $1 billion. Total liability is $2.7 billion, which is also up $1 billion, and that gives them a total stockholders' equity of negative $793 million, which is down slightly, but nothing to really be concerned about. Now, obviously, I really don't like companies with a negative balance sheet. It's better that it's consistent, but I'm still kind of worried about that, especially considering that the earnings are fairly small and the PE is kind of high, and the balance sheet just does not make sense for that. So as far as risk factors goes, there's no external risk factors. The only risk factors that I see is kind of the balance sheet. Kind of internal stuff that could be going wrong quite quickly. Now, these numbers have been reported 9/30, so just a couple months ago. And so obviously that already factors in a large part of the current situation going on in the world. And so it's not that concerning anymore, I suppose. I assume that things will continue kind of at this pace for quite a while. Overall, I'm very concerned that the balance sheet is going in the wrong way, but adding $1 billion on both sides is not necessarily a bad thing. So overall, for a growth investor, growth of 5-ish% is not great, obviously, but it's not terrible. For a growth investor, definitely not enough. For a dividend investor, dividend of under 2% is also not great, but not quite terrible. That really wouldn't hold me back as a dividend investor, but the balance sheet definitely would. Also, the PE is kind of high, so for a dividend investor, I also wouldn't recommend this. For a value investor, the balance sheet is terrible. Everything else looks pretty decent. Forward PE is decent. The dividend is decent for a value investor. And the revenue growth is quite nice. So overall, everything's decent except for the balance sheet. And the balance sheet kind of makes me want to not invest in this company right now. So I would probably wait, but considering that the balance sheet has been so consistent, I would kind of just pass on this and maybe look for a better opportunity, which is definitely out there right now, even with the current prices in the market. So overall, to summarize, I don't think I would buy the stock. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.